Now, for more on the trade talks between the world's top two economies and whether a deal can be reached before the March deadline, I am joined by Saruhan Hatipoglu. He is the CEO of BERI and CGTN Global Economics Analyst. Saruhan, it's always good to see you.
Pleasure to be here, Sean.
Let's talk about this ended with some positive news. President Xi Jinping showing up and the fact that these talks are going to spill over into Washington, D.C. next week. That's the good news. What can we take away from that?
Well, it is good news, but I mean, if you were to look at Wall Street Journal and Financial Times and how they reported on the talks, it was completely opposite. Wall Street Journal said they're inching toward a broader agreement. If you picked up Financial Times, they said there's absolutely no progress. But if you look at really the discussions and how we have advanced, that is positive news because they're not only talking about numbers now, which was always the case for President Trump, right? Reduce that trade deficit and all that, but they're talking about forced technology transfers. National People's Congress is going to pass a law in March banning, as part of the foreign investment law that they're thinking about, banning state interference on companies. So that is a very interesting development in my opinion. Whether it will come to that or not this week when they meet next week, I mean, we'll see, but those are positive developments.
That is a significant move, and also because there are so many media outlets reporting that one area that these two sides can't forge a bridge is exactly on that, and stealing intellectual technology, which of course China has repeatedly denied doing. How difficult is it going to be to satisfy both sides on that issue?
Well, it's going to be difficult, and this is not going to be, by the way, the March 1st deadline. Let's get real here. It's not going to happen. News leaked already that there's going to be probably a 60-day extension to this, and imagine that 60-day extension on the uncertainty of businesses, by the way, who are redoing their supply chain. So there's a lot of discussions to be made. But this positive news about forced technology issues and the conversation that has started in China about China, Made in China 2025, there are voices within the government that are saying, look, the state-owned corporations actually are causing inefficiency. We need to get the private sector involved here. So there are some common points that the two sides can agree on, but in terms of getting a comprehensive trade agreement, that's not going to happen.
And when we talk about the two sides, or at least the efforts in Beijing and in China to find a way to come to an agreement, we have to look at what's at stake. President Trump has indicated, and even though the deadline may slide, that he could increase these tariffs by as much as 25% on $200 billion worth of Chinese goods. At this point, it's going to be a very significant hit. How likely do you think this is going to happen, and if indeed Trump is willing to let this March 1 deadline slide?
Very unlikely, and I'll tell you why. The $50 billion, the first initial set of tariffs when it was applied, about $1 billion of that was for China. China did not have a dominant position on the initial set of tariffs, the $50 billion one. This $200 billion, half of it are goods that China has market dominance on. That means if those tariffs are slapped, the prices are going to increase in the United States. Walmart CFO said that bluntly in an interview. If this passes, don't expect us to contain price rises. So the government knows this. The market, you know what happened in the last quarter, especially in December. The market knows this. And President Trump, who loves the stock market, knows this. So I don't think that they're going to increase this to 25%, but they will do what they've done with the EU and Japan. They'll have a memorandum of understanding, alleviate the tension, and work their differences at a slow pace.
Saruhan, let's also talk a bit about the real numbers that are out there, because this is no longer just theoretical. The production numbers are down, and they're down significantly in China and the United States. This is the engine that's driving the global economy. How concerned is the rest of the world about this ongoing tit-for-tat fight, and what can they do to weigh in and get these two sides to come to an agreement?
Well, there's a lot at stake, and if you look at, we talked about the business uncertainty here, that's one thing. But if you look at the numbers, it is not only manufacturing, services numbers started to slow down in China. This is spreading, and it's spreading to the United States as well. Look at the corporate earnings reports that came out, or still coming out nowadays. You're looking all, reduced forecasts for 2019, and they're repeating China, China, US trade problems almost in every corporate report. So there is kind of pressure from the businesses. But the main pressure is going to come from the consumer. The consumers don't want to see that increased prices. And look what happened to the retail sales that came out a couple of days ago.
Real quickly, we don't have a lot of time left, but talk to me about the markets clearly like where this is going. We saw a bump in the European markets when Xi Jinping met with the negotiators, and the U.S. is on an 8-week success run.
Well, again, it's how you see it, right? The Asian markets closed down on the same day. So it is positive in that they were closer to a deal. But once this is signed, Sean, it is going to be a deal on mostly numbers, which is going to satisfy President Trump, but it's already priced into the market. So don't expect, I certainly don't expect a huge bump in the market if just the deal is signed on the tariff or trade deficit numbers.
Saruhan, we all know the markets don't like to be surprised.
Absolutely true.
Thanks for joining us. We greatly appreciate it.